Maruti is one stock which is suddenly taking a knock. The numbers were expected. Oh yes, the numbers are out close to 1900 crore, 1880 exact to be precise. The profitability number which has come in probably slightly on the lower side of the estimates. That's why the stock is taking a knock. Awan, do you have any more details yet?
I don't, but I don't think the street is going to be happy with 1880. Ajay, we were working with a number of about 2087 crore rupees, and that was higher by about 22% on year. And remember, this is one stock that has just been such a fabulous performer over the last year. Pretty much everything has worked in its favor as well. So I think expectations were riding high when it came to the Q4 performance as well. So 1880, just mind you, this number has come on the wires, so it's not a complete confirmation. Okay, there we have it. 1882 crore rupees, and that is what Maruti has delivered for the quarter gone by. And that is definitely a miss on the bottom line front. We'll wait by, more importantly, for numbers like what they deliver on the revenues. It's expected to be 15% higher as well. And remember, the improvement in the overall product mix, there's been an absence of discounts. All of that is expected to have boosted the realization growth, leading to a fairly decent quarter. Let's take it to Prayesh. Jain, Prayesh, hi there. Let's run you through the numbers that we have. 1882 PAT performance and revenues have come in quite healthy actually at 21,165 crore rupees. How are you looking at these two headline numbers?
The revenue seems to be broadly in line. Nothing major disappointment there, but profitability definitely looks lower than expectation.
What would you like to hear from the management commentary this time around with this kind of performance?
See, the thing is, the management is expected to talk about the royalty stuff, which they had said that they are in negotiation with Suzuki to lower the royalty. Would seek to get clarity on that part. And also with regards to the future model lineups and how do they scale up Gujarat plant and how is the localization picking up. So these would be key things that will need to be watched from the management.
Prayesh, one quick word on one hypothesis which is coming up in the market is that with almost 56-57% market share in the biggest category, they are kind of at the upper end of the possible market share, and from here on 19, 20, 2021 there could be reason to believe that the growth may ebb out. Do you subscribe to this view?
See, the further market share gains from here on is definitely difficult. But I would say the Maruti would be able to retain its market share, and it's actually the capacity constraint that the company has actually restricted the market share gains. Else, we would have seen much better market share levels even from these levels, because the kind of waiting period the company is enjoying on its models like Brezza, Baleno, the Desire, and even for that matter, S-Cross now is on a wait period. So considering those points, I think the market share would have been actually much higher in the current levels. I consider it would be difficult to gain from here, but Maruti should be able to maintain it given its strong network and the kind of rural growth that we are seeing now. It's more rural driven than urban. Had it been urban driven, we could have conceded that market share would have been lost, but being rural driven, I think Maruti has the upper hand.
Okay, stay with us, Prayesh. I want to also get in a view on the overall auto space as a whole. And Harshad, what is your assessment of, this space as a whole? A lot of promise riding on it. There have been new launches, the overall rural thrust as well for certain players. Are you seeing this sector as looking promising in the long haul?
Yeah, we do believe that this sector will do well over medium to long term. As I said, this is a part of the consumer discretionary, and within that we are more positive generally on four-wheelers and many ancillary businesses.
Right.
Okay.
Prayesh, what kind of margin number are you working with for Maruti from here on?
I think the margin should improve from here on, actually, mainly because of the one definitely is the royalty part, that the company has said that they would see a decline in royalty. And secondly, Gujarat localized, as Gujarat scales up and localization improves there, the cost of purchase of those vehicles should also reduce. And with majority of the models being on the wait periods now, so discounting has to be substantially lower going ahead. So that definitely calls for margins to improve from here. The only risk is definitely commodity prices, and so that should be offset. So steady margin improvement is expected.
Stock, by the way, has come off, now currently consolidating around the 8,915 mark. Let's also get in Mayuresh Joshi and his comments. And Mayuresh, we have a margin picture that's a little bit lower than what we were expecting, 14.2%. EBITDA has come in at 3,014 crores. Revenue growth quite healthy at 21,165 crore rupees. I want to dwell on that margin number a little bit more. Do you think that the currency impact led to that rise in royalty provision, then the rise in the raw material costs as well affected margins? But is this sort of a one-time thing?
Afternoon, Avan. I think that is a possibility, but as Paresh was mentioning, over the next few months and quarters, the margin performance should improve on 3-4 broad-based criteria. A, the mix improvement that Maruti is getting about. The second element in terms of discounts actually reducing. The royalty component will slowly and steadily start coming down. And as their Gujarat ramp-up is going to happen in a significant scale over the next few quarters, they actually did almost an annualized production of almost 2 million odd units. And with phase 2 coming through, I think there'll be better absorption of fixed costs. And that benefit of leverage should play out on the balance sheet. So margins, again, tad bit disappointing on what they reported because of factors that we need to probably observe from a line-in-line item that they disclose. But largely, I think stability in margin should come through because of these broad-based factors that should work in favor of Maruti.
Fresh, hi, it's Karunya here coming in. Let's talk a bit about the margins because the management has said that, they have seen a fair amount of pressure come in the raw material prices. But when we last spoke to Mr. Bhargava, he said that they're fairly, hedged as far as the RM, as far as the metal prices, as far as the RM costs go. But clearly, they have come on record saying that. And that coupled with the Gujarat plant ramp up, for how long can we see this kind of pressure being put on the margins going ahead? Because clearly this time around it has been a fair amount of dent on the margins. For how long can we expect this pressure to continue?
Actually, if you look at the margins, it's not at the gross margin level that the impact we are seeing and the disappointment. The disappointment actually comes from staff cost and other expenses. So this definitely needs to be clarified from the management as to what's the reason for staff cost and other overhead. Well, overhead will have some marketing expenses with regards to the new launches, but even that seems to be on the higher side. So it doesn't seem to be that commodity prices have actually have caused the margin pressure. It seems to be more of marketing and other expenses that seems to have brought in the pressure this time around. So we'll have to hear it from the management as to what really drove this increase in these two overheads.
What about the appreciation that we've seen in the yen over the last couple of months? Could that have played the devil in this case then?
Yeah, royalty would definitely would have played in the other expenditure part, and that would have been a cause for the margin impact. But that seems to be on the higher side than what we were working with.
Clearly, let's talk a bit about the revenues as well. They've been a beat on the revenue fronts. It's come in fairly above what the ET Now poll and most of the people on the street had expected. Despite a slightly less than expected volume growth of 11%, we've seen a good sort of a growth on the top line. But do you see volumes getting a bit under pressure from here on? Because we've seen Maruti expand a fair bit as far as the market share is concerned, at 50% plus, at the end of the last fiscal. What is the kind of scope that you see for further expansion in volumes, for further expansion in market share for Maruti?
The volume growth would be pretty healthy, and considering that the rural seems to be on a rebound, and there's a lot of upgradation that's happening from lower end vehicles to upper end vehicles, and Maruti itself has premiumized its portfolio. Secondly, if you look at FY18 data, the Alto has grown after a period of 4 to 5 years, and that indicates that the first time buyers are back in the market, and that is a healthy sign for Maruti. So we expect the volume growth to sustain, and it's actually more of a capacity constraint issue rather than anything else that is restricting the growth for Maruti right now.
What about the royalty reduction proposal which came out last quarter? Although management has off the record told us last time around that it will not impact the margins too much, but what is it that analysts are factoring in?
See, it could be anything from, like we were working with around 20-30% positive impact, but clarification needs to come from the government, from the management as to really what would be the kind of impact that we would see.
By when can we the Suzuki-Toyota partnership is something that the street is keenly awaiting on, as per your analysis, and you've been tracking the company for a fair for a fair amount of period. What is how much of a benefit do you see Maruti gaining from this partnership in the next couple of years?
So from Maruti's point of view, it gains on two grounds. First is it wouldn't on its own wouldn't have been able to enter into the segment as Corolla. Where Toyota has an upper hand, and even our earlier attempt with Kizashi had not received that kind of success. So to my sense, I think with Toyota tie-up, that premium segment, premium sedan segment, Maruti will be able to get a good hold and create a name for itself there. And secondly, with electrification coming across, I think Toyota would have a much larger repertoire of products, and that would help them to benefit a lot.
Mayuresh is also with us. Mayuresh, what is your view as far as the Gujarat plant ramp up has been? We are seeing the phase 2 also come by now. Till when can we see a pressure, on the margins front as far as Maruti's performance goes, and from when can we expect some kind of relief and some kind of benefit of that plant come into the financials?
So there are two ways of looking at it. One, I think the phase 2, phase 3 capacity expansion with an additional capacity of 250,000 units odd should hopefully be operational by Jan 2019 and Jan 2020 respectively. Having said that, what you're probably looking at in terms of the localization for the Gujarat plant, currently anywhere between 15 to 18 odd %, that should substantially increase beyond 50-55 odd %. And again, the headroom, probably as is being visible from the numbers from the Gujarat plant that I mentioned earlier, I think as the phase 2 goes live, as expected from Jan 2019, you're probably going to see additional units anywhere between 55,000 to 60 odd thousand. As Paresh was rightfully mentioning also, I think you're probably looking at lower loyalty because of the localization at the Gujarat plant that will also have a say in terms of both the EBITDA as well as the EBIT margins actually moving up. And the operational efficiencies because of the leverage on their balance sheet would be very, very evident. So again, I think the volume growth in terms of the Gujarat plant can substantially go up. The localization can drive the EBIT margins and decline in both logistic costs as well as lower royalty. And the entire premise in terms of even the discounting factor going up will give it the additional scope to improve its margin performance. So I think it's all about the management commentary surrounding all these issues on how they are looking at the plant and ramping up the entire processes there.
Paresh, I have a question for you. Not exactly on the quarter-to-quarter run rate, but the way the stock from 10,000 upwards came down to 8.5, the way margin profile, the way market cap of the companies. Do you think it's more of a compounder from here on, say a 15% year-on-year kind of a compounder over the next couple of years, versus a massive, multi-bagger, if I may call it, over the last 10 years it has been? Do you think the size has become so large and market has matured a bit that it is at best a compounder?
Definitely, the stock is trading at premium valuations, and the thing is, quality never comes cheap, and that's the reason it has been trading at a premium valuation to the entire auto sector. We see that this kind of momentum is sustainable in terms of volume performance, and that would mean that the premium valuation is justified. And I concede that it wouldn't be a multi-bagger from here, but 15 to 18% kind of yearly returns is quite achievable for Maruti investors.
All right, Prayesh as well as Mayuresh, thanks so much for joining in, assessing the numbers for us and giving us your view. No doubt the stock has come off from the high point of the day, but it's been pressure on the margins this time around. The revenues have been fairly decent and profits too have come in a little bit lower than expectations. So a bit of a mixed quarter is how we could describe Maruti. After all the give and take, 8791 is where it's currently at.